Good morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, January 19th. One more day before the inauguration, and I'm going to title this video as Volatility is About to Explode. Not just the inauguration, yeah, that could be something that may help the volatility increase. But guys, I'm telling you, I see it internally, what's going on behind the scenes. You just cannot have no movement in the markets. Change of government. We have volatility, average true range, the lowest since 2014. Consumer confidence up at its highest in 6 years. We have an overextended market, a fully valued market. May I go on and on. I am not trying to get on my soapbox. What I am trying to do is warn you guys. We have volatility that is about to explode. And it's not me, it's what the charts are telling me. And that's what I want to do. If I want to get anything, get a message out to you guys, and you get anything out of these videos, just please, as investors, swing traders, buy protection. Protection is at its lowest that it's going to get. Okay? Why am I so, let's say, convinced? Well, it's not that I'm convinced, right? Because we don't want to just be, made up our minds that volatility. I am just saying that volatility is ready to explode. Now, remember, we can have a market explode higher and volatility just continue to drop out of the range, so that could happen too as well. But that's not what I'm talking about. I'm talking about more of volatility that will go higher, that explode higher, and right in front of you is the VIX, the VIX. Look at its Bollinger Band, guys. The Bollinger Band hasn't been this tight in a very, very long time. We have positive divergence that are brewing, right, from our RSI, our Commodity Channel Index, CCI, right, and RSI way up in here, you could see, while the markets are what? Just consolidating again, and that's the VIX. When this happens, look for an explosive move in either direction, because it does not tell you what direction it's going to. But if history does repeat itself, when you're at these complacent lows, there's only one way to go, and up. And if the VIX is going up, what's happening to the equity markets? They're headed lower. Okay. Banks also, they surprised. They had a great earnings, but what happened? We rolled over yesterday, and we did not recover today. That's a big importance here. Some of the bigger bellwether stocks that are reporting, I think the bar is way too high. Not only do you get the inauguration, but you're also going to get the earnings season that I believe that's going to drive this market a little bit a little bit lower, and that's going to increase volatility. Remember, the markets do not like uncertainty, and the way Mr. Trump is tweeting out these different companies and going after movie stars doesn't sound like a president that usually does this type of let's say media, talking to the media and talking to its peers. So just be careful out there. There's a lot of uncertainty, and when I see, and there's plenty more to show you that I just can't do in this short video, just use caution. But I do suspect volatility will start to explode, and even if it's not Friday, I think it's around the corner. Okay, around the corner. Well, what does that tell us? That tells us for the longer term guys, the guys that are holding trades, protect your portfolio. For the day traders, just be ready and just remember, trade your plan. And if you see a sell signal, make sure you get your trigger on your sell signal, okay? Because everybody has different plans. That's really all I'm trying to say. But I want you to guys be prepared to what's to come, and I do believe that the volatility is going to explode. Next, we have the SPX and the average true range. 2014 lows, guys. This is extreme. This is worrisome for a professional trader when you see ATR this low and VIX this low and consumer confidence at 6-year highs. What does that tell me? When you in the old school type day, right, when we were trading, when you see consumer confidence at its highs, 6-year highs, 5-year highs, the first thing you do is you start looking to short the market and candidates to short the market. Obviously, with algorithms and HFTs, really kind of destroyed that type of trading. But nonetheless, you have to be cognizant of what's happening in your surroundings. Next is the New York Stock Exchange advanced decline with volume. What's happening here? Well, we're holding at its highs, and look what's happening. Lower lows and lower highs in the NYUD. Not a good sign, okay? If we are internally building strength, this should be up to here. This should be somewhere in here, if not higher. So again, I'm just saying, use a word of caution. I am not trying to scare anybody. I'm just trying to get everybody on the right side or protect their portfolio. Okay, let's get to the indexes. We had the dollar. What did we say yesterday? We said watch for a bounce here, and what do we get? A beautiful bounce, right? Remember, guys, I think the dollar's to stay. I really do. I don't see, and we get some extra volatility. Guess where big money's going to be parking their funds? Not all of it, but it's going to the dollar, and you'll probably see gold start to rise again, which we'll talk about in a second. Next is bonds. What happens that bonds starting to break back down again, and I was looking for, a possible 127 move. Now it's going to need to recover tomorrow. Today. If it doesn't recover today, remember bonds could also benefit from uncertainty as well, and volatility, because there's another area to park money is bonds, gold, and of course the dollar itself. That's the three staples of where you want to put your money, big money. So again, I think bonds can, if hold here and we could take back this candle today, then I think we're probably off to the races. But we do not want to look to buy anything until we take out a swing high, a local swing high. This swing high right here needs to get taken out before we look to add to any longs or to take initial long position. Because right now, all this is telling me is that from here all the way down, we did alleviate some downside pressure of lower lows and lower highs, right? But we're still headed lower. This is, to me, now needs to test. This is where you get the higher low test, right? So if we hold here and we go back up and take out the swing high, that's the higher low from the previous base low. That, to me, as a trader, would solidify, okay, I'm indeed now looking to buy pullbacks, okay? That's how it works, guys. Next is going to be GLD. And if bonds are going lower, gold's going lower, right? Same thing. We caught this area here. We filled the gap, remember? And I'm just showing you the premium videos. Take a look. Go to the website, tradingmarkettechnicals.com. We have a big announcement on our videos coming February, the first week of February. So take a look at it. These levels are not just, little support resistance. They're the confluence areas of actionable area of support and resistance where price will react to, okay? Next is going to be GDX, and you can see GDX came back into the horizontal channel, but still okay. There's nothing wrong with this at the moment. But if we start to break down the lower end of this channel, 2257, start looking for lower prices yet again. Spiders, you can see here we have our proprietary support and resistance areas. But if you looked at it, we did absolutely nothing. And this is here. This is what scares me. And again, if I'm trading, I'm not holding any positions at all. I would be day trading. I'm not looking to do anything other than that. Not at these levels, not at 24 forward PE. I won't even think about it. But again, you're at these levels, and if you see what happened here throughout the whole summer or all of 2016, base, one move up, base, one move down, base for 3 months, Trump rally, and then base. So what did we have? All of 2016, we had a pretty decent. I should say, let's go back a little bit. We had a pretty decent beginning of the month where we sold off and then we rallied. But look what happened. We based from April all the way to July, right? And then we popped up from July all the way. Believe it or not, this is just one big. You're talking almost 6 months of consolidated base, right? If you think about it, right here, all the way up until the Trump rally was right about here, okay? July, August, September, October. There's 4 months of trading right there. And then now we have another 6 weeks of trading up here. So really, indexes have gone absolutely nowhere. IWM, 134, we got a couple of days close below it. I want to wait till after the inauguration. If we get a pop back into this horizontal channel and we fail, that's going to be your cue below 135 in the IWM for lower prices. Initial target will be 125.87. Transports, I wanted to show you this. Nobody's talking about it, so let's see if this happens. Remember what I mentioned months ago. If the pattern is recognized by the pundits, CNBC, Bloomberg, what have you, and you have Maria Bartiromo, Fox News, and you have Michelle Caruso Cabrera, CNBC, talking about a head and shoulders, or Bill Griffith, who they don't know nothing. They know nothing about technical analysis, and they start talking about it, you might as well scratch the pattern because it's over. But nobody's been talking about this. Let's see if we get a Head and Shoulders break. Is this a Head and Shoulders? Yeah, I definitely think it's a Head and Shoulders. I don't think it's as pronounced as I'd like it to be, but there's your little left shoulder, there's your head, and there's your right shoulder, and your neckline is clearly identified, which coincides nicely with our volume zones and goes all the way down to where? Back to the base below the Trump rally. Okay, so let's see if we get a trigger in the next couple of days. I believe that you're going to. Now, we did have a CSX report, so it may pop up a little higher, and if it does take the neck out, then obviously this is going to be negated. But it's something that's there. It has not triggered, so it's a bearish pattern that has not triggered. Okay, but we'll keep an eye on this. You do the same. Last is going to be Qs. We're holding up above the bearish rising wedge. Let's see if we get back in it. Netflix report, it was up about 8%. But dig into the earnings in Netflix, guys. A lot of their burn rate is now, it's even more than it ever was since the company came public, and that's not going to be good going forward. But we'll see what happens. Remember, cold stocks doesn't matter. They just keep buying it and buying it until it hurts. So keep an eye on Netflix going forward. We also have some big earnings coming. So watch your earnings calendar if you're holding stocks. Have a great day, guys. We'll see you tomorrow.